Okay, let's look at exercise 2-5B and 2-6B. That'll help you with your homework. If you get 2-5B, 2-4B will be easy for you, so that's why I'm not going over that one as well. So we're going to apply transactions to in the transaction grid for the different transactions they give us, and then answer a couple of questions about that. So the first transaction is we acquired $38,000 cash from issuing common stock. So I have cash going up by $38,000, common stock going up by $38,000. There's no income statement effect, and we have $38,000 cash coming in, financing activity. Next, we earn $30,000 revenue on account, and that word on account means we're going to be paid later. So in that case, I don't receive cash of $30,000. I increase my accounts receivable by $30,000, and I increase retained earnings by recognizing revenue of $30,000, and there's no cash effect of that. Next, we paid cash $25,000 for operating expenses. So cash goes down by $25,000, retained earnings goes down by $25,000, we have $25,000 of expense, and we have cash flowing out, which is an operating activity because it's a revenue or an expense. Next, we borrow $15,000 from a bank. Cash goes up by $15,000, notes payable goes up by $15,000, no income statement effect, and we have $15,000. It's a financing activity, just like getting money from shareholders. Number 5, we collect $25,000 of the balance in accounts receivable. So it's an asset exchange transaction. So cash will go up by $25,000. The money people owe us is now $25,000 less. That goes down. No income statement effect. But here's where we recognize the $25,000 we get from our customers. Last transaction, we pay a $2,000 dividend. So cash goes down by $2,000. Retained earnings goes down by $2,000. Again, dividends are not an expense, so it's not on our income statement, and cash flows out for a financing activity. Now I can total everything up, and that'll help me answer the questions they ask. So B, what would accounts receivable? Would the accounts receivable appear in the assets, liability, or stockholders' equity? It would be an asset on December 31st. It's something we own. Next question, determine the balance of accounts receivable at the end of the year. Well, that would be this $5,000 right here. Determine the amount of net income that would appear. That's this $5,000 net income right here, revenues minus expenses. Next, they ask the amount of cash flow from operating activities. That's going to be $25,000 negative plus $25,000 positive, so it would be 0. And then why is the amount determined in D different? Because the timing of activities under accrual might be different than the timing of cash. So let's take a look at 2-6B. So 2-6B is similar, but now we're going to be dealing with accounts payable. And I just want to walk through the transactions with you on this one. So in this case here, Kendall Company earned $25,000 of cash revenue. Cash goes up, retained earnings goes up. And they incurred $10,000 of utility expense. So accounts payable, money we owe other people, will go up by $10,000 and we'll recognize an expense. Okay, no cash flow related to that. And then it says that we made payment of $5,000 on our accounts payable. So cash goes down, accounts payable goes down. No income statement effect for paying what we owe, but we've got $5,000 of negative cash flow there. So I total everything up, and that'll allow me to answer the questions. So the amount that we owe at the end is $5,000. The total expenses, $10,000. So we recognize the full expense even though we didn't pay it all. The amount of net cash flow from operating activities is $15,000. That's over here. The amount of retained earnings, that would be $10,000. And then again, the same reason. The activities that generate our income or expenses are different than the cash flows associated with them. So hopefully you found that helpful. Please don't hesitate to email me if you have any questions. Thank you.